This week, the Australian dollar traded from around 76 cents to below 74.50, the lowest since mid-January. It received a temporary boost from the positive risk sentiment following the outcome of the first round of French presidential elections over the weekend. As polls had indicated, the EU and Euro-friendly Emmanuel Macron finished ahead of the nationalist candidate Marine Le Pen, who promised a referendum to leave the European Union and replacing the euro, saying that the EU will die. Equity markets also started the week on a positive note. Turning to domestic data, Australia's Q1 inflation was a little softer than expected. It printed at 0.5% quarter-on-quarter. The annual rate of 2.1% is back in the RBA's 2 to 3% target band for the first time since Q3 2014. Core inflation, which excludes extreme measures, was at 1.8% year-on-year. There was a surprising jump in dwelling prices, but otherwise, the March quarter continued to show competitive margin squeezes in the retail space. So while inflation expectations are drifting towards the long-run average, there is little to suggest that inflation is gaining momentum. The US dollar had a volatile few days. We had expected President Trump's tax plan to be more helpful for the US dollar. The one page of bullet points, however, did not mention key details, and its vague themes appeared to be rushed out before Saturday, Trump's 100th day in office. Expectations of loose fiscal policy, though, and the Fed's plans to raise rates should keep the US dollar supported medium term. In the near term, markets will still be watching the next attempts at repealing the Affordable Care Act, or Obamacare, renegotiation of trade agreements, funding of the Mexican border wall, as well as more details on tax. Next week, we will have the RBA decision statement on Tuesday. There should be no change in policy, and the commentary is unlikely to be downbeat enough to see market pricing for another rate cut beyond the current small risk of 10 to 15% probability this year. The RBA's updated quarterly forecasts will be out on Friday. We expect the March trade balance to show a record surplus of $4 billion, as exports continue to rise faster than imports. These should keep the Aussie supported. In the US, the Fed is likely to keep rates on hold in the 0.75 to 1% range, after raising them last meeting. Markets are pricing in 15% chance of a hike next week and around 70% in June. Westpac expects the next hike in June and another in December. There is also the non-farm payrolls report to watch on Friday. In light of this, we expect the Aussie to trade mostly in a 74 to 75.50 range in the week ahead. We'll speak to you next week.